From coffee houses to crypto, let's talk stocks. All right, let's be honest. When you hear the word stock market, do you immediately picture a bunch of guys in suits yelling numbers at each other under a giant, anxiety-inducing ticker tape? Well, you're not alone. It can seem like a very confusing, very intimidating world. But believe it or not, the stock market has a long, fascinating, and frankly kind of insane history, filled with booms, busts, and enough drama to make a soap opera jealous. So today, we're going to break it all down for you, from ancient trade right up to the modern digital era. And along the way, we'll see how the stock market contributes to the world economy, driving growth, innovation, and prosperity. Ye olde trading posts before the stock market. Now, before we had these fancy stock exchanges, people still needed ways to finance big ventures. I mean, imagine trying to get a bunch of ships across the ocean to trade spices without a little help from your friends, or at least your wealthy neighbors. In ancient Rome and Greece, wealthy citizens would often fund these risky trade expeditions, essentially an early form of venture capital. Fast forward to the 1300s, cities like Venice and Genoa started issuing government bonds. It's not quite the stock market, but it's getting warm. The Dutch get their first birth of the stock market. And then in 1602, bam, the world's first official stock exchange opens up in Amsterdam. Why Amsterdam? Well, at the time, the Dutch were basically the rock stars of global trade, and their lead guitarist was the Dutch East India Company, or VOC. Now, the VOC was a big deal, like really big. They wanted to dominate the spice trade with Asia, but those ships and spices weren't cheap. So they did something revolutionary. They started issuing shares to the public. This meant regular folks, not just mega-rich merchants, could buy a piece of the VOC and share in the potential profits. London calling, the rise of British finance. Now, the Dutch may have invented the stock market, but the Brits, well, they took it and really ran with it. See, in the 1600s, London was buzzing, and where there's buzzing, there's business, often being done in coffee houses. We're talking about places like Jonathan's Coffee House, where traders would gather and, fueled by caffeine and ambition, strike deals. In 1698, they got organized enough to publish the first official price list, basically an early version of the Wall Street Journal. Of course, with all this trading came some, shall we say, exuberance. In 1720, the South Sea Bubble, one of history's first major stock market crashes, burst onto the scene, reminding everyone that what goes up can most definitely come crashing down. Chapter 4. Hello, Wall Street, are you here to stay? Across the pond, a new financial powerhouse was emerging, New York City. In 1792, under a buttonwood tree no less, 24 brokers decided to form what would become the New York Stock Exchange, or NYSE. This was a big deal. The NYSE would go on to finance some of the biggest industries in American history: railroads, oil, steel, you name it. We're talking about the Rockefellers, the Carnegies, the JP Morgans of the world. These guys weren't just playing with money, they were building empires. Chapter 5. Yikes! That didn't go well. Panics, crashes and regulations, but let's be clear, the stock market's journey hasn't been all sunshine and roses. The late 1800s and early 1900s saw a series of financial panics in the US that would make even the most seasoned investor break a sweat. And then, of course, came the big one, the Wall Street crash of 1929. This wasn't just a crash. It was a full-on market meltdown that helped trigger the Great Depression. The world had never seen anything like it. Governments realized they needed to step in and, well, try to prevent the entire financial system from imploding every few decades. Cue the regulations. The Securities and Exchange Commission, or SEC, was born in the US, tasked with keeping things relatively honest and preventing, or at least attempting to prevent, another 1929. Chapter 6. From the ashes we rise, post-war growth and going global. Thankfully, it wasn't all doom and gloom. After the devastation of World War II, the stock market, much like the global economy, experienced a remarkable period of growth. Countries like Japan and Germany, once devastated by war, rose to become economic powerhouses, and their stock markets followed suit. This era also saw the rise of institutional investors, think pension funds and mutual funds, who became major players in the market. No longer was the stock market just a playground for the ultra-wealthy. More and more people were investing for their futures. Chapter 7, the digital boom and bust. Welcome to the internet age. And then came the 1980s, shoulder pads, big hair, and oh yeah, the digital revolution, which completely transformed the stock market. In 1971, the Nasdaq launched as the world's first electronic stock exchange. No more frantic hand signals on the trading floor. Now you could buy and sell stocks with the click of a button. Of course, this being the stock market, things couldn't stay stable for too long. In 1987, the world was hit with Black Monday, a global stock market crash that reminded everyone that even in the digital age, markets could still be unpredictable and, frankly, terrifying. Chapter 9. The Digital Revolution continues. Discuss the involvement of technology in the global stock market, including the rise of algorithmic trading, high-frequency trading, and the impact of fintech innovations. Highlight key technological advancements and their effects on market efficiency and accessibility. As we moved into the 21st century, technology didn't just change the way we live, it revolutionized the stock market yet again. Enter algorithmic trading. These are computer algorithms designed to trade stocks at speeds and volumes that human traders could never match. Algorithms analyze vast amounts of data in milliseconds and make trades based on complex mathematical models. This led to the rise of high-frequency trading, where firms execute thousands of trades per second to capitalize on minute price discrepancies. Fintech innovations also began to democratize the stock market. Mobile trading apps like Robinhood brought Wall Street to Main Street, allowing everyday people to trade stocks from their smartphones. Blockchain technology emerged, promising to make transactions more secure and transparent. These advancements have made the market more efficient and accessible. But they also come with their own set of challenges. The speed and complexity of algorithmic trading can contribute to market volatility, as seen in the flash crash of 2010, when the Dow Jones Industrial Average plunged about 1,000 points in mere minutes before recovering. Yet despite these hiccups, the integration of technology into the stock market continues to evolve, making it a dynamic and ever-changing landscape. Chapter 8. The dot-com bubble went up wasn't up enough. But the digital revolution was just getting started. The 1990s brought the dot-com boom, where any company with a website and a dream could go public and make millions. Remember pets.com? Yeah, exactly. It was a wild time. But as with all bubbles, it eventually burst in the early 2000s, leaving a trail of shattered dreams and worthless stock certificates in its wake. But hey, at least we got Amazon out of it, right? Chapter 9. From crisis to crypto, the modern market. Just when we thought we'd seen it all, the 2008 global financial crisis arrived, triggered by a collapse in the US housing market and, well, let's just say some questionable lending practices. Banks failed, Lehman Brothers went kaput, and the world held its breath. The crisis led to major reforms like the Dodd-Frank Act in the US, aimed at preventing another financial meltdown. But the stock market has a short memory, and before we knew it, things were booming again. The 2010s saw the rise of retail investing apps like Robinhood, making it easier than ever for anyone with a smartphone to buy and sell stocks. So there you have it, a whirlwind tour of the stock market from its humble beginnings to its current digital glory. But this is just the beginning. In part 2, we'll be diving into the top stock markets around the world, exploring the titans of finance and uncovering the forces shaping the global economy. Who knows, you might just learn something that will make you millions, or at least impress your friends at your next trivia night.